How to enter a simple single-tenant analysis into planEASe. First, go to File, New Assumptions. You start every file this way. Put in an investment name and the amount of square feet. Click OK. And then in the price of property, put in the price that you think the property is going to go for. And you want to have a date of acquisition. We're going to use January of 2010. It could be any month or year that you want. We're going to have closing costs be 1% of the property price, 10%, 10-year life, and then we're going to capitalize next year's NOI at a 10% cap rate. You'd have the tax rates here on the depreciation. Any number less than 100 is a percent of the price, so we'll say it's 80% of the property is depreciable, 20% is the land. On the revenue page, we'll click the C button, and we'll say it's $10 a square foot, and that's going to grow at 3%. Now, since this is a triple net, you could put the leases in and use the reimbursement area to put in the reimbursements, or here we're just doing simply so they're a wash. We're just not going to put in either. We're going to say the expenses are covered by the tenant. And then on the loan page, we're going to have an 8% loan over 20 years, and the loan's either going to be a debt coverage ratio of 1.2, and that is shown as a loan amount of $996,000, or a 80% loan to value, which is shown as 960, whichever is lower. Obviously, the loan to value is lower, so we're going to go with 80% loan to value, and we'll put in 1 point on that. And then we go to basic. Here we have the price minus the loan. That's our equity in. We have the revenue from the tenant minus the debt service equals our leveraged cash flow. Down at the bottom, this cash flow before debt is this cash flow before debt column. That's the return equal to the yield on a bank account. With leverage is your cash flow before tax. That's equal to yield on a bank account. Page 2 shows the taxable information. Page 3 shows it after tax. If you click on exit, the movies up here will show you how to put in more details on the different revenue items or different kinds of leases.